right, good afternoon, and Ben and team, thank you very much for hosting us here and giving us the opportunity. Hopefully we can impart some knowledge, wisdom, and perspectives on you all, and I have to compliment the great space here, and yes, I am the only person in this room with a tie on. Okay, so you heard who I am, Chris Scarpati. I'll let our panelists introduce themselves. Paris?
Hi, everyone. I'm Paris Cribben. I'm the general counsel at Silvergate Bank. And just to get it out of the way, the views I expressed today are my own and not that of Silvergate Bank.
Sure.
Dana?
Good afternoon. My name is Dana Syracuse. I'm a partner with Paul Hastings. I've been a lawyer in the digital asset space for over 10 years and represent a number of the leading infrastructure providers.
Hi, everyone. My name is Marta Requeijo. I'm Senior Vice President for Financial Crime Compliance in BVNK.
Awesome. All right, well, let's get right into it. The topic of our panel is about regulation in the markets today. And so I would argue that there is an uneven patchwork of regulation globally, right? With the EU a bit further ahead or more mature than we are here in the US. So why don't we start and just paint a picture of where we are in our different regions. So Paris, why don't you start with what's going on here in the US?
Sure. So to state the obvious, right, the U.S. is definitely trailing behind a little bit. That said, we've had some really active dialogue in 2022 and a lot of movement in 2023. We have it at the state level as well as out of D.C. I mean, at the state level, we have Texas and California recently enacting legislation there. And on the federal level, we have some serious progress, especially on the stablecoin side. And I think we'll get into that a little bit more later today. But there's definitely a difference between where the U.S. sits and how the global environment is thinking about crypto. And I think that the United States is a bit at an inflection point, and we need to decide here what we're going to do in 2024 to see if we're going to keep innovation in the U.S. or continue to push it further offshore.
Right, and we'll definitely get to that because that's definitely a hot topic here. But let's switch to the UK and what's going on in the rest of the world. Marta.
Yeah, so I agree with Paris completely. I think the US is falling behind compared with both UK and EU developments. And we'll leave details for later. Yeah. But both, from an EU perspective, what we're seeing is movement of a unified framework, both in terms of licensing, supervision, and then enforcement if necessary. The UK is following the same approach, more a regulatory guidance approach. And what I see in the US until this moment, I agree with you, Paris, I think it's going to change, is more regulation by enforcement, which I think is less, less outcomes in the sense of wanting the markets to go in the right direction. And in comparison with the more guidance approach that UK, EU has at the moment.
Yeah, your point, by the way, on regulation by enforcement is basic ethos here. Just even in the traditional banking sector, right? Like that's what you tend to see. Everything from restrictions on and enforcement on third-party communications and off-channel communications, yeah. Right? Again, in the traditional side of the finance world. And yeah. Dana, how about you? You spent a lot of time, obviously, in your role advising clients, talking to different clients. Any thoughts on your views on the divergence and what's going on around the world?
Yeah, I mean, there's no doubt that it's uneven, but I think it's uneven for a lot of different reasons. It's uneven because different regulators have different missions. Some regulators are about consumer protection. Some regulators are about investor protection. Some are about both. You have different regulators that are interested in different products. I see a fair number of clients looking overseas to various regimes to get licensed because there are new regimes that allow for the launch of a specific product. By the same token, I see many clients trying to come to the U.S. So we are helping with both. I think that there are a lot of great sound bites where people talk about wanting regulatory clarity, uneven patchwork. The fact is, you're never going to have clarity across the entire industry because this industry is different types of products and new types of products that are emerging at different times. And reg lag is a thing. Legislators, regulators, They need to learn a product, then they need to understand how to license, how to supervise, how to staff up around that, and all of those things, it takes time. It's the reality that I think we need to live with. And then, regulation by enforcement, there's no doubt that exists.
Yeah.
I mean, you have entities that they will be licensed or chartered, and they establish a history and their issues, and then enforcement happens, and then that sends certain kind of guidance to the rest of the industry. But there is also a lot of clarity that's coming into shape. Here in New York, you have stablecoin guidance out of NYDFS. You have the SPDI regime in Wyoming. You have South Dakota that has chartered several digital asset companies. You've got California, which just recently passed a bill that has some very actually tight language around what it means to be a custodian. So that all, these are data points and kind of an overall constellation of the law that do provide a form of clarity.
Great. All right, let's talk about stable coins a bit. So Marta, I thought yesterday it was notable with the FCA and Bank of England coming out with asking for a request for comments, right, on the proposal. Yeah. What's your view? Can you share some insight on what you're seeing regarding the proposal itself, and maybe where do you think ultimately the glide path of those comments will be?
Yeah. So as I was saying before, I think that the most important thing, and understand Dana's comments about clarity, and it's very difficult to have clarity on something new because you will continue to change, and the whole regulatory process takes time. So the EU, the whole process takes 18 months just to look at results of MiCA that is coming. Sure. And people are talking already about MiCA 2 or MiCA 2. And the responsible people are saying we need to wait 18 months to see how it goes, number one, and then we'll add new things. So it's something that takes time, but I think predictability is what the industry needs. And all these, either regulatory by guidance or by enforcement, as you said, the moment there is an enforcement, there is a legal action. You take clarity from that too. So it's positive too. It's not all negative. But I think from my perspective, it's really important to have predictability in terms of licensing. Right. And both on the EU side with MiCA, you would have a unified framework for all those countries, because in the EU what's happening is it's not a directive, so a directive needs to be transposed to every country. So there is then a second action which each country can implement in their own way. It's a regulation. That means it has direct applicability to all countries in the EU. That means that if there's anything that is not aligned with, it needs to be revoked or changed. So I think it will be massive from an EU perspective when it's in place, which will be between June 2024 and December 2024, depending on the entity. The UK is doing the same thing. So not being inside EU from that perspective, the approach is similar. So there is also a lot of clarity in terms of protection of consumers, both in the EU and the UK. Sure. And now HMRC, as you said, put this consultation. I think the process is a very clever one because it allows industry to comment, both on the EU side and the UK side. There is the consultation period where all of us can, jump in and comment and try to influence. So that's what's happening. So right now, on the stablecoin, the proposal is to bring in scope of the payment service regulation, which will bring a lot of clarity to the industry, and also in terms of issuancy and custody. So those are what the consultation is right now. You asked me where do I think it's going. I don't know. I don't know. But I think it's going in direction of providing clarity. Either you like it or not, you will have a clear, guidance on how you position your products, your services, how do you offer to each customers. And I think that's the great advantage, because anything that is predictable will ultimately bring trust to the market. And that's what we're aiming, more trust, because then you have, a widespread, adoption and continuation of trust from the markets and consumers for the product. So I think that's the biggest advantage, is seeing the progress. I think the final one is roles and responsibilities. There are countries that have one regulator, there are countries that have several. So for example, in this proposal, the FCA and the Bank of England and the PSR will have responsibilities, different responsibilities. It's very important that you know with whom you're dealing and for what. And I think this proposal is very interesting from that perspective. I think it's very new. It happened recently, so
Right.
still need to, within the industry meetings that we have, and there's a lot in the UK, to kind of discuss what is there to kind of see where is it going.
Interesting. And let's talk a little bit about the clarity for payments, the McHenry bill. No doubt, Dana, as counsel, you've shredded that bill. You know it inside and out. So can you do us a favor and maybe break it down for the audience a little bit?
So I mean, I think what it comes down to, whether it's the McHenry bill or any of the proposals around stablecoins, it really is about protecting consumers. It's about making sure that they're appropriate. Things like proof of reserves. I think that's just one of many there.
Right.
But there are other bills that, for example, give a path to the states and state chartered trust companies to act as the custodian for the underlying assets. So I think for these pieces of legislation to work, I think that they should have a path for both for the federal and the state side. And one of the things that I think is also critical here is, and this is when we talk about regulatory clarity, this is the point where I don't have a clear answer, is what happens in the event of bankruptcy, in the event of wind down for entities that are stablecoin issuers or those that hold the reserves. Now, there are legal arguments around bankruptcy remoteness for things like state chartered trust companies, but these are all still unproven. So, the regulatory clarity that I worry about, it's not so much that I'd like to see, or that will take time. We can kind of figure out where regulators are going to go, because we've seen the history of law of enforcement actions. We can kind of figure out where guidance will go that kind of gives us a very clear step. We can kind of figure out where pieces of legislation will go because it gives you a roadmap. But the area of judge-made law, particularly in bankruptcy context, that's still a very big unknown.
Right. Yeah. Fair enough. Paris, what about you from your perspective, sitting on the industry side? Does the bill provide you any sort of clarity?
No, not right now.
Right.
But I think the McHenry bill does a good job being quite comprehensive, accounting for traditional kind of FIs as well as private entities in the space.
Right.
I think it does a good job of looking to both the federal and state regulators for the most part. I think that's still a debated issue that needs further clarity before it can go anywhere.
Right.
I think some of the issues with the McHenry bill are still around, public versus private blockchains and what that will look like, and what would happen with a tokenized deposit, for example, issued by an IDI. So I think some of those issues are still left to be hashed out until the bill could actually pass. But I do think the McHenry bill on the stablecoin side has the best chance of survival as we move into 2024 as it exists today, because it really is a bipartisan issue.
Right.
I think that both sides of the aisle really want, the U.S. dollar to remain strong. And if we don't get stablecoin legislation, in the U.S. here in the next year or so, I think we really run the risk of seeing, more entities move offshore.
And what do you think that does for adoption here in the U.S.? Do you think we're out of the game at,
No. I think adoption remains strong in the U.S. It's just the infrastructure behind it might not be based in the U.S.
Right. Interesting. Anything else to add on that at all?
No, I mean, I think, as we talk about, the federal side and federal legislation, I also think it's important to kind of still, particularly when we're talking about, banking services, to consider things like the dual banking system here in the U.S., where I know it's a patchwork, I know it's 50 different states, but that has traditionally been like the laboratory for innovation in financial services, and with the idea being that those kind of local bank regulators know the communities that they serve. And it's a weird thing to say in like this borderless industry, but it actually is right now, a small-ish community with very unique needs that requires a regulator to really dig in and understand that and govern around that. Because otherwise you run the risk of drafting that misses unintended consequences.
Yeah. And it's complicated enough here, right? Because with 3 banking regulators and 2 securities regulators, right? At that level, it's already complicated enough. Not to mention now we have to deal with state level regulation, right? Which just adds to the complexity. So with regard to what's going on here in the U.S., right? So we have miscellaneous and sundry proposals out there. We talked about the McHenry bill for a few minutes. We're in an election year, coming up, right? We have very polarized views on both sides of the aisle, right? What's your view on like what happens and where we go from here?
We have polarized views, but I think
You think we get any sort of like?
I'm hopeful
Yeah.
we get something.
Right.
Polarized views, but people are talking, right? So since 2022 and 2023, I think the continued dialogue in Congress is really, really, really positive overall. What we ran the risk of in the United States, and I think we still run the risk of, is we really don't want to over-legislate. So you really want to make sure that lawmakers understand the issues, are setting up bills that have clear definitions, clarity around what agency does what, who has oversight when, and has a prescriptive risk management framework, but still allows for innovation and change. You don't want it to be so pigeonholed or defer to the traditional financial incumbents that no one else can enter the space. And so
Right.
while it seems like it's been taking a long time and it's slow, and a lot of people are of the opinion something is better than nothing and the U.S. is going to be left behind, I'd rather see it take a little bit longer than over-legislate and put the U.S. in a position where it's not workable and feasible. I don't know, Dana, if you...
Yeah, I mean, I agree with that. The fact is, like, our system moves slowly, but as a result, it's the safest in the world, which we shouldn't lose sight of. And I think that it is very tempting as sitting there looking at kind of the burn rate, looking at the months go by, maybe a year goes by. What do we do to want something quickly? But if it is too prescriptive, or if it doesn't have the right definitions, it can actually add more confusion. I think the other important part of legislative efforts is to make sure there's appropriate funding in place for whoever is responsible for implementing. The worst thing that can happen is we have this very nice, pretty piece of legislation, and it says, one office you're in charge, but that office doesn't have the money to hire anybody to actually process your application. What do you what do you do then? So it is so multifaceted, and I think it's very important to dig in and move past the soundbite.
Yeah, I agree, and I think U.S. is slower, but sometimes slower steps are more secure. And I think when we speak about UK or EU or US, it's not that there are silos between the areas. Regulators are in continuation of conversation. SEC Commissioner Price was in London in May. She was saying, I think the EU and UK approaches can be utilized to a certain, dimension to what we have in the US, and utilize what has already been discussed. And, I see prudency on the 3, areas or the 3 regulators that contribute on not regulating about everything. So what I commented before about micro-regulation, there is several things not in scope, and people start asking, we need clarity. Yeah, but we also need to go to understand where the products are going, where the industry is going, and then regulate when we see how things operate. Because if the information is clear and we say to the consumers, this is regulated, this is unregulated, these are the risks that you have, then I think that's enough. And then realizing more and not strangling something that is coming to the market, and let innovation come, and then regulation can follow. So there is always a delay, as Dana said, between one thing and the other, because if regulation jumps, just strangles the market and there's no innovation in the market.
Right.
So just one quick little vignette about evolving law and either new law or analogizing back. So we're working on a couple of different projects involving tokenized carbon credits. Mm-hmm. And there's not a lot of law there. So what do? When we talk to the regulator, we're talking about how they applied the law in the past to crypto.
Right.
And then where did that come from? the law that they're applying to crypto, they actually applied to the securities.
Yes.
So it's like this very like weird evolution that you wouldn't expect.
Yeah, and there's also hesitation from regulators. I would not name the country, but we discussed with the regulator, and we were keen to proceed with conversations. And the question was, why don't we wait for more clarity in terms of regulation? Why are you speeding up? Because we want to have the environment discuss and be part of the discussion with you while all this grows. But certain countries are more towards anticipating and working towards, and some countries do want to wait until December 2024, so MiCA brings clarity and they don't risk anything.
Well, it's also, do you have the resources if you're a regulator
absolutely.
to like dig in and do it yourself, or are we going to kind of follow behind somebody else? But I think one really important thing is showing regulators why it's actually important that they be interested in this, because you guys all have businesses, but regulators also, it's like a mini business. They have a budget, they have a head count.
Absolutely.
There are only so many hours in the day. So, you're telling them while they're also regulating banks and regulating insurance companies and regulating capital markets that they should devote resources to this piece. It's very much a two-way street. And it's that type of interaction, I think, winds up being effective in bringing them along. Now, that being said, they're playing a role, you're playing a role, but that's what makes it a partnership, and that's what's effective.
Right. Yeah. I think in some ways the challenge is, at the risk of stating the obvious, right? We're trying to devise regulation in a nascent market where the market structure is still evolving, right? And therefore, the regulatory environment needs to still evolve, right? It's not like the 40 Act or the 30 Act, right? Like those markets were established, they're established now. To make any changes to regulation in the traditional securities markets is a lot more straightforward because the market structure is established. It's been that way since the dawn of time, right? But I do think if I draw any sorts of parallels to post-financial crisis regulation around the world, right, we did see a significant amount of consistency from country to country, region to region, particularly with the derivatives markets, right? And it got to the point, as maybe some of you know, right, where there's substitute compliance between prudential regulators, right? And I think we will ultimately get there, right? Because markets are global, right? And unfortunately, any other ethos that runs counter to that will just crush the market, full stop, right? But I do think it's something that will take some time, and it will continue to evolve. So maybe in the 10 or so minutes we have left, there is a question that came up here, which is an interesting one. From a financial crime perspective, how can DLT payments and digital assets improve our ability to monitor and comply with regulation? Now, Dana, your point about when we were talking about the McHenry bill, it's all about customer protection, right?
Yeah.
Which is the through line with all the different aspects of that bill. But any thoughts on?
Can I get the question back again, please?
Sure, yeah. From a financial crime perspective, how can DLT payments and digital assets improve our ability to monitor and comply with regulation?
I have no idea. No, I'm
Yeah.
joking. Monitoring, it's, some regulators are moving to this notion of, real-time supervision. And if you're able to do that, you're able to identify issues, fix them, make it part of more of the supervisory relationship as opposed to getting to enforcement.
Right.
I think that is, one very important result there, which, leads to overall safety. You're not waiting until the end. You're not waiting until there's, some type of massive issue. But, I think it goes back to, being able to, identify and monitor information, just as you're describing.
I can give one example. So DLT, digital assets, transactions, utilized from the perspective. So I'll use the word monitoring as transaction monitoring. So
Sure.
Obviously, when we do transaction monitoring digital assets, we can't utilize the old finance, tools we had before. So we use blockchain analytics, and there is a lot of third parties that are very reputable regulators and FYUs, which is the investigation from a government perspective, utilize those tools. And so the interesting thing with digital assets is, from my perspective, being in financial crime for 20 years, looking at investigations, reporting to regulators, and being a former regulator, yes, there is more information on the blockchain. So if I use a comparison with SWIFT payments, you see all the information on the payment fields on the last legs of the payment. From a digital assets perspective, you see everything from moment zero to today. So I can see if a payment, for example, is related to a Russian bank years ago, and by then it was not sanctioned, and now is it. And so from a financial crime perspective, our teams are looking at new challenges, and what we've done before to the fiat world is not directly implemented to digital assets, but we can utilize most of it, and then with the necessary adaptations. But from an investigation perspective, I have seen the provision of information to the police and the authorities very much more complete than from a fiat perspective, because you can see with transparency the whole history of it and not just the final leg. So that's an interesting one from a digital assets perspective, and the tools are still being developed and still being, made more sophisticated. So from the outcomes perspective is interesting.
Yeah, I think one of the challenges is you have so much information. What do you do with it? How do you sift through it? How do you actually find the problems?
Yeah.
And then go about dealing with it.
I can tell you the regulators here already have a significant amount of information around what's going on in the traditional securities markets, right? And the question remains about how much that information is actually being used to drive supervision, right? But that's a whole other story. So we got quite a few questions here.
These from the audience?
These are all from the audience. All from the audience. Sorry.
People are afraid to ask.
Yeah, this is great. So sorry, there are a bunch. It was mentioned.
If you're going to read a question, someone has to identify themselves.
Yeah, right. They're all anonymous, actually. Okay, so there's a trend of recent countersuits, i.e., Uniswap, Coinbase, Kashi. How has the legal response from cryptos evolved, and how will it impact regulation?
I think this is a you question.
Yeah. Poor guy's on the hot seat. Sorry, Dana.
I'm going back to the point I made about judge-made law. That will have over time an impact as it kind of moves from motion practice, which we've seen, to the trial court, to appellate court. That will over time get baked in. Judges are people. Their kind of understanding and perception of the industry is also important as they preside over these matters.
Right. Great. Okay, that seems to be it with respect to anything. Oh, hold on.
I mean, there's quite a few on there.
Yeah.
Paris gets the next one.
Yeah, let's see. No, that's another regulatory and compliance related. No, I don't want to put you on the hot seat again, Dana. Here's a good one. Here, not all stablecoins are equal, e.g. Terra. What specific requirements do you think should be imposed on stablecoin issuers in order to reduce the risk of collapse?
I can go for it.
Go for it.
Well, let's starting with some of the obvious.
Capital.
Proof of reserves.
Absolutely.
Adequate risk management framework.
Right.
All the basics. You want to be able to trust. To trust the issuer, right? And what would make you trust the issuer? And just think about it from that perspective.
And I think I agree with all that. I think one interesting thing about the stablecoin market is, there's some stablecoins out there that are highly regulated, and there's pretty good data out there about proof of reserves. There are others that, they lose their peg, but certain segment of the population globally doesn't care about that. So the psychology behind it, I think, is really interesting. And, the psychology of, you pick a particular stablecoin, you're utilizing the stablecoin. There'll be some that use it because it's just an efficient movement of money. There'll be institutions that use it for the very same reason. But depending, I think, on the part of the world that you come from, and whether or not you trust that stablecoin that may not have a total peg versus your own currency, that's gonna influence the adoption of that. And then if you have, because of that kind of prevailing worldview, the adoption of a stablecoin that is not necessarily completely pegged, what does that then introduce to the entire ecosystem? So your point about these markets being global, that's a tough one.
Yeah, yeah. Okay, last 2 minutes. Let's talk about a prediction, if you will. If based on everything we talked about today, if you think about regulatory hindrances and hurdles, be it regulatory, legislative, market structure, global synchronicity globally, when do you think we reach the point when the industry is at scale? Are we, is this a 2-year time frame? Do you think this is a 5-year time frame? Paris, you're smiling.
We're not at scale yet. No, there's no way.
Right.
I think in terms of predictions, I think we see probably more enforcement in the United States next year. I think we see potential legislation on stablecoins. I'm hopeful about that.
Yeah.
I don't think we see anything more comprehensive than stablecoins, though, in the U.S. in the next year. And I think we've got a lot of room to grow.
Yep.
So.
Yep. Dana?
I agree with that. I don't think you can really make predictions in this space. You can't make a prediction of when it's going to reach full maturity. There are too many unpredictable factors that can influence that. I think the thing that's important is at a macro level for the industry to look at what can we control.
Yeah.
We can control developing products that have good product market fit. We can control how we interact with the regulators and law enforcement, and doing so in a responsible manner, and therefore kind of having a general uplift. We can. Those are the things that are within the realm of our control, and then you piece enough of those together, then maybe you can make those predictions. But it's doing this for a long time, and the crypto time span, 10 years plus is a long time.
Sure.
And every year is different. Every single year is different.
So too many unknowns. Lots could change. Hard to say.
That's a good answer?
I mean, who would have predicted Q4 of 2022 and 2023?
Absolutely, absolutely.
Yeah, I mean, if you talk about unpredictability, Satoshi white paper, 2009. Nothing happens from a regulatory standpoint. FinCEN 2014, they issue their guidance. New York steps into the scene 2015. 2017, ICOs happen. Did anyone really see ICOs happening? Then the SEC gets more involved. Then you've got this just massive proliferation of assets. Stable coins come along, NFTs come along, NFTs go away.
Yeah.
It is, some are still there,
Right.
but it is too unpredictable to be able to give that prediction.
Yeah.
I think the same as Paris and Dana said. To Dana's point before, I think the only prediction is we'll have more clarity, because I think regulators right now and governments are looking into it. A different kind of prediction connected to my area that I can do is there will be for sure more noise in financial crime space.
Yes.
Because crypto and digital assets is not different from any other payment. So, cash, money service businesses, everything can be utilized to defraud people and to, commit crimes and to move illicit money. So the only thing I think as an industry we should do is remember and reminding people that it happens with any asset and with any payment rail, and it's going to continue to happen with crypto. And actually, research from all blockchain analytics tools shows it happens much less with digital assets because of what I said. Of the transparency of the information than with other payment rails. So yeah, more noise from a financial crime perspective is my prediction.
That's an excellent point. I mean, I do believe firmly that this industry is going to continue to grow, and in one form or another, it will be kind of a cornerstone of our financial services industry.
Yeah.
But what that means is the same types of frauds, the same types of bad acts, all of those things can work their way in, which is why, early on when we spoke about regulation, you had Eddie saying, they were running away from it. I don't think you should run away from it. I think that, you should kind of look at it and embrace it and act like a mature industry.
Yeah.
Great. Well, we are 1 minute and 32 seconds over, so I just want to thank you all for the time and the insightful comments, and we're good. Thank you.